Our panel is first here to my left, Patrick Holden, but for those of you who don't know of him very much, he is a farmer and an activist. Mostly a farmer. I've seen you as an activist as well, but I guess you can be a very effective activist because you're a farmer and because you speak from the heart and you have the experience that it takes to be able to speak about these issues from the ground.
I arrived with a group of 5 other people on the farm just up the road from here, and we wanted to set up a self-sufficient, self-sustaining rural community, obeying the law of return, although we wouldn't have put it that way in those days. But we were idealistic, and we instinctively knew that we wanted to return to a farming economy which had all the features that Ellen was talking about this morning. And we pretty soon found when we arrived on the farm that we were competing against common agricultural policy subsidized, at that time heavily subsidized milk, because we were dairy farmers, and if we'd been growing grain it would have been the same. We couldn't really make a living just selling onto the markets, commodity markets, which were incentivized by CAP subsidies. So we had this bright idea: why don't we write down what we were doing and set up a separate market which would add to the prices we could charge based on the sustainable prescription. And that was the organic market. I mean, we didn't have it alone, but we had it with about 100 other people in the UK, and then it was going on in synchrony all over the world. And so I literally was involved with developing the organic standards back in the 80s. I wrote the first draft of the dairy standards, and the whole reason now I realize with hindsight was we were treating the symptoms, not the cause of the problem. So the premium that was needed to be charged for organic products is because there is a systemic failure to put a price on the costs and benefits arising from different farming systems. And until and unless we correct that, properly sustainably produced food will be confined to the margins, because it will have to be more expensive to carry the unincluded negative and positive, to compensate for the unincluded negative and positive externalities. So just fast forward to today. What are we doing 44 years later? We're trying to be self-sufficient in animal feed. We haven't got there yet. In cattle bedding, we have got there. In as much of the food that we're growing on the farm as possible. We'd like to be self-sufficient in energy. We haven't got there yet. And in even seeds and breeding of our animals in time. And I completely sign up to Rudolf Steiner's visionary talk that he gave in 1924 about the farm as a self-sustaining ecosystem. So that's our aspiration. And the economy of the farm, working on that system, is that we're producing, say, up to 40 tons of cheese a year from our 80 Ayrshire cows. In fact, we're selling some milk to Rachel's Dairy still, but more and more of it's going into cheese. But we're having to charge a price for that cheese, which is well-produced cheese, not fancy cheese, but it's incorporating all the externalities and it's doing all the right things. And we employ 4 people, so we're adding value to the local economy and all the things that I was saying. We're having to charge £11.80 a kilo ex-dairy for our cheese, whereas you can go into Sainsbury's in Lambton and buy, mild block cheddar for, I don't know, £6 a kilo, probably less than that, retail. So by the time it gets into Neal's Yard Dairy in London or wherever else is selling it, it's probably minimum of £25 a kilo or something like that, and maybe a little bit less for some retailers. I see Phil Horton's here, and he's selling it in Bristol. I don't know what you're selling for. Do you know what the retail of our Havod is? Yeah. And that's just how it is. But the reason is because the dairy farmers who are, no offense to any dairy farmers, and I can see Robert Craig's at the back there, and he's got 1,000 dairy cows and is a brilliant farmer, but he's farming in a different way to us. He's following the best business case for dairy farming at the moment, but it's probably causing uncosted environmental damage through his use of nitrogen fertilizer, and there are not a lot of the social benefits that if he employed more people and all that sort of thing, which he can't because there's no business case for it. So I'm trying to do the right thing, and I'm up against an economic headwind, so I've got a day job. And my day job enables me to apply my principles in practice on the farm, But in order for this to go mainstream, we're going to have to correct the dishonest economy, which doesn't reward producers for the environmental benefits they deliver, nor penalize them for the damage that they do to the environment and human health. So for me, the inquiry, now I'm switching to my Sustainable Food Trust hat, is how we can correct that. And just a very brief summary of what I've been involved with. Prince Charles gave a speech in Georgetown University, Washington, D.C. in May 2011, in which he talked about the absence of the polluter pays principle and how we needed to do something about this and tackle these so-called externalities, as economists call them. And since then, we've organized a couple of conferences, one in London in 2013, and then another one which the Moore Foundation sponsored last April in San Francisco, called The True Cost of American Food, which brought 600 people together, trying to identify, quantify, and eventually, hopefully, monetize the range of externalities arising from different food systems, the intensive ones and the sustainable ones, with a view to working out how we can introduce carrots and sticks to correct the distortions of this dishonest pricing system we have at the moment. And I've also become involved in another program which the Moore Foundation is funding called the TEEB Agri-Food Program, which in part came out of the London conference, which is bringing together an international community of researchers who are trying to develop a methodology for accounting for food systems externalities and then looking at policy instruments. And I will just leave you with one carrot and one stick that might be part of the solution, which would switch the balance of advantage in favor of more sustainable farming. I'll start with the stick. If there was a nitrogen tax and farmers who use nitrogen fertilizer were taxed in proportion to the damage that the nitrogen fertilizer is doing to the environment and public health, it would rule out the business case for using it. At present, farmers are paying, how much are they paying per kilo, Robert? How much are farmers paying for a kilo of nitrogen fertilizer? £200 a tonne, there we go. So that's, wait a minute, how much is that a kilo? It's surprisingly little.
20 cents.
So basically, you can buy it for very cheap. You apply it to your grass. There's a fantastic business case for using it. That's why he's using it. But the European Nitrogen Assessment worked out that if the damage caused in pollution, in climate change, and in public health, and in cleanup costs of water, was charged to either the nitrogen manufacturers or the farmers who buy it in the form of a tax, it would no longer be profitable for Robert to buy his fertilizer. But meanwhile, Robert and all his, the majority of farmers in the UK are trapped on a treadmill because that's the best business case. So we have to tackle that. And now the stick. If farmers were rewarded for soil carbon stewardship directly in proportion to the maintaining or building soil carbon in the form of, organic matter, and all the Pillar 1 payments which are currently going to farmers, which is like a social security payment, you just don't break the law and you get it, were transferred to incentives like a soil carbon stewardship payment, that would really shift the balance. And if you put the two things together, the carrot and the stick, then many more farmers would shift to more sustainable production. That's probably enough for me.
Thank you, Patrick. This brings the question about one of the key principles of the circular economy, which is the law of return. And you have to really interpret that in a broad way. I think the problem and the fallacy with modern agriculture is that it interprets the law of return in a very narrow way. So you take a product out of the farm and you dump fertilizer, and that's the way you return what you took out of the farm, out of the soil. And of course, this is a travesty, because in fact you are not replenishing everything that you are taking out of the soil. There's a lot of micronutrients that are not going back into the soil. And as we have heard from Patrick, the other problem, of course, is that a lot of the long-term loss of organic matter that comes with that type of agriculture is also a loss that you're not recovering. So the application of the law of return in this new way of looking at agriculture has to be much broadly interpreted than it has been until now. So now let's turn to what happens when the product goes out of the farm and into the world. And from that, I would like to ask Volkert to give us a little bit about how that works for his company.
Thank you, Guillermo. We just published a report called True Cost Accounting in Farming, Food and Finance. And that's about the sequence here, farming, food and finance. And because Patrick talked about a lot of the business models and the systemic change that is needed to come to a fairer profit definition, I thought, and thank you, Guillermo, I say a little bit about soil to begin with as a trader. At this moment, we are losing the equivalent of 30 soccer fields of fertile soil per minute, accumulating to 12 million hectares a year. Isn't that amazing? Who's paying for that? And we can talk about nitrogen, we can talk about nutrient losses, but this wonderful magic layer, thin layer, where cosmic and terrestrial forces meet in a symphony with trillions of microorganisms. I mean, the power, the magic that is hidden there. We can talk about true cost accounting, but as John said in the bus, that is a tool to achieve something. We can't put a price on everything. That's completely impossible. But if you look at the situation we're in, I think we all agree, thanks to the introductions of the Prince and the many things that were said this morning on stage, particularly also by Patrick, we are looking into a mirror, aren't we? A mirror that reflects the limitations of our own thinking. I mean, we can point at others, but isn't this also something where we, as human beings, are challenged in our thinking? So, in our company, we have embarked on this, what we call 3D leadership model, where we say if we want to deliver change or sustainability, we must dance, we must co-create, we must find the harmony, the magic of human encounter that creates something that is bigger than the sum of the parts, something that makes 1 + 1 5 or 10. Isn't that also a challenge? And where do we learn that ability to dance? But in order to achieve that, we need to differentiate, D for differentiate. To differentiate between who we are and who we want to become, between our little smaller egos and our higher self, maybe. And I know this sounds not very much like a business language, but I think that's precisely why we got here in this mess, after all. And you know, we lack the educational systems on all levels to challenge us, not only from a deliver point of view, but also socially and particularly mentally. Because where is this inner space that we need to develop inside ourselves to make sure that we can embark on a new thinking? As with Einstein, we can't solve the problems with the thinking that created them. Anyway, back to true cost accounting. What we do as a company, we simply say organic is not too expensive, conventional is too cheap, as long as we keep externalizing costs of people and planet to future generations. And there's no such thing as sustainability without transparency. So we started putting the face of the grower on all our products with a unique QR code so consumers can trace it back to its origin. Because that's where it starts, not with people and planet, with the unique story of the unique individual that produced the food. So that is one thing where we need transparency throughout supply chains. The second is we communicate the impact on people, and we in a threefold way, and we communicate the impact on our planet in a fourfold way. And we do that with the help of 4 M's. We monitor the impact, we manage the impact, we monetize the impact, and we market the impact. So we started calculating on the basis of metrics developed by TEEB, developed by FAO, SAFA, particularly the Sustainability Assessment in Food and Agriculture, and other calculations like developed by the WHO to measure and monetize the impact of our food production systems on a per kilo basis and on a per hectare basis for all our product lines. And we measured soil, water, biodiversity, climate, livelihoods of people, and health. And we came to the conclusion that, for instance, just to pick out health, based on the DALI, the Disability Adjusted Life Year calculation by the WHO, organic apples, for instance, are 21 cents healthier per kilo than conventional apples, simply by looking at pesticides. Now, I know this is a delicate thing to say, because often people say, you can't scientifically prove that organic is healthier. And I'm sure, what is health? You know, what we as simple Dutch traders decided, okay, if there's one calculation available on pesticide impact on the health, then let's pick that one. And according to WHO, fed with data from EFSA, validated by EY, Ernst & Young, organic apples are 21 cents healthier, well, less toxic than conventional apples. So we loved to make that statement and see what the response from the market was. It was huge, as Trump would say. Finally,
I had to bring that up.
I had to bring that up, just to prepare the ground for my left neighbor. Yeah? Since we had established this true cost of food, which is very complicated and scientifically challenging work, of course, you'd have to reduce your KPIs to 20% that define 80% of your impact. But we thought we need to do it on a per hectare basis. We owe it to our growers. We owe that transparency to our consumers so they can make an informed purchase decision and help their friends to understand that organic is not too expensive, but conventional is too cheap. And then we did the final step, well, for the time being, the final step. We didn't only establish the true cost of food and farming, we also converted that to our balance sheet and to our profit and loss account. So we teamed up with FAO, with WHO, with the Natural Capital Coalition, with the Social Capital Coalition, and we came to this new balance sheet and profit and loss account for our entire company based on full life cycle assessment through the entire supply chain from field to fork, from farmer to consumer. And we capitalized this, not only just in a financial, but also in a natural capital and a social capital way, providing financial institutions, because Triodos Bank and other financial institutions were involved in the pilot. We provided them with the first instrument, I think, so far, to not only judge and value companies on the base against financial capital, but also against their footprint in natural capital and social capital. So since this was embedded in the World Business Council for Sustainable Development, we have achieved something that can be scaled up quickly. Thank you.
Thank you, Volkert. Now, John, I would like you to take a step back and give us your perspective on the sort of the bigger issue, which is how this transition from linear to circular can happen within the bounds of the capitalist system. Can do it within those boundaries, or how fundamental the changes need to be before they can be a reality?
Simple question. First, I have to respond to the prompt of our current president. This is the first time I've actually ventured out of the safety of the United States to appear in public. So I have to acknowledge that it's a weird feeling. So I'm not going to apologize, but I feel like I had to say something. It's really a profound time in the United States.
Beginning to leave now.
Yeah. Just by saying the word. So real quick, my own story. I was a mainstream banker for almost 20 years. I always like to say at the old J.P. Morgan. I was involved in capital markets and derivatives when they got started, and then private equity, venture capital, and then I had sort of a tap on the shoulder feeling that I needed to change, and I left the firm in 2001. I always like to say that too, before the financial crisis. I had nothing to do with that either. And I went on really a search, and this gets to the answer to your question. If I have one message, it's that the transition and the shift we are in the midst of is way bigger than we yet collectively have processed. The sergeants who are here at the conference, I don't know if anyone's in the room, gave me the Prince's book several years ago. And I was blown away because the Prince gets it. And what's written in that book is far more profound than shifting from a linear to a circular economy. I wrote a paper called Regenerative Capitalism. And when I say capitalism, I mean capitalism, multiple capitals, natural capital, social capital, spiritual capital, relationship capital. And the subtitle is How Universal Principles and Patterns Will Shape the New Economy. And so I've taken this idea of looking to living systems and the patterns and principles of living systems to its extreme to see where we're heading in the best estimate that I could. And that's written up in the paper. There are 8 principles that I've written about. One of them is robust circulation. So clearly, the robust circulation of materials, energy, information is a critical piece of a whole, but it's just a piece of a whole, in my opinion. And another principle is in balance, which is in harmony in many, many places. The fractal pattern of the flower is representative of balance. Well, economics, conventional economics, is about the pursuit of efficiency. It turns out in living systems, and we have hard, rigorous data to prove this coming from living system science, that efficiency is in balance with resiliency. So the core goal of conventional economics, the pursuit of efficiency, is a fundamentally in conflict with living systems, the patterns of living systems. So that's just one example of how we need to fundamentally rethink all of our economics. Another example, one of the principles I talk about is in right relationship. We know that relationships, healthy relationships, are central to all living systems. That's true at a cellular level in our body. It's true at a family level, at a community level. And if I think about modern capital markets, in our pursuit for efficiency, we've created this system called capital markets, where investors, big investors, pension funds, put their money in funds that then speculate in stocks. But we've actually, in the process, severed the relationship between owners and enterprises. So a pension fund doesn't own 100% or 30% or 5% of a business and exercise the responsibility that comes with ownership. The pension fund has allocated capital to 15 fund managers who speculate in stocks. So how does this relate to the food system? Well, there's a man named Paul Pullman who runs a little company called Unilever that's in the food business. And he is sort of the poster child of sustainable business leaders. And he's, I have a huge respect for this man and his commitment to this work. But as some of you are probably aware, he was, a couple months ago, his company was under attack by a private equity firm called 3G, which is a Brazilian, it's a company that bought InBev, the beer conglomerate. And they have a very standard conventional business model, which is to acquire, cut costs, extract financial capital, financial value, and then move on to the next one. And if they do that on a scale of 100, the next time they need to do it on a scale of 300 in order to keep the Ponzi scheme going. So Paul Polman, who's, you know, the world's leading sustainable food and personal care products company CEO, is suddenly in the crosshairs of a financial opportunist. And I'm saying things that aren't terribly politically correct. This financial opportunist is now backed by Warren Buffett, who's the world's leading long-term investor. But he's got more capital than he knows what to do with. And these guys have shown they can generate financial returns. And so because he's a public company, it's sort of his duty to find places to place his capital that can generate returns. So he's funding 3G Capital, which is doing the opposite of what Warren Buffett has made his career standing for, which is long-term ownership and the responsibility that goes with ownership. Now, he'll defend it by saying, well, you know, businesses need to change and they need to stay efficient, and sometimes declining businesses need to lose employees, and that's all true. But what happened is that because Unilever doesn't have real owners, it can't execute its long-term sustainability business plan. So I wrote another paper called Evergreen Direct Investment, which calls for institutional scale capital to invest in businesses with the intention of holding them and earning their return through dividends, not with the intention of buying them in order to sell them at a higher price, which is essentially what all equity fund managers do. They buy a stock with the intention of selling it at a higher price. Now, sometimes it takes 3.5 seconds, sometimes it takes 0.3 of a second, sometimes it takes 3.5 years, but the holding period has shrunk considerably. So, again, I can blab on forever. But my big picture message is that if we're serious about the message in harmony, we need to much more fundamentally rethink our entire economics. And the only way I know how to do that is to get to the first principles that exist in living systems and be honest about them and hold them up against our current economy and see what transitions we need to make.
It's really a very sad situation around here in Wales. Most of Wales is pasture, especially West Wales around here, and most of the farmers are producing beef and sheep. There used to be thousands of dairy farmers in West Wales, nearly all of them, not nearly all of them, a lot of them have gone, and the ones that have survived have had to get much bigger. And I would describe the farmers that are left in the main as commodity slaves. They are selling meat, mostly grass-fed, and actually pretty good meat on the whole, at less than the cost of production or just on the cost of production. Of course, the markets go up and down, but they're just completely blowing in the wind, and they've got no ability to set the price whatsoever. There used to be vegetable producers in Wales, but they left because all the supermarket vegetable suppliers have pack houses in the east of England, and so therefore they can't really get access to those markets anymore. So the only ones that are left are supplying local markets like Peter and Anne, who are here and whose vegetables we ate for lunch, and some of the other local producers who are supplying onto local markets. So to address your question, what are the obstacles? I think the whole system at the moment, and I can't believe it isn't influenced by what you've just described very compellingly, is loaded against farmers charging the honest price for their products and making a relationship with people, buyers directly in the marketplace. And if you even take this school, I don't want to be rude about the food that's normally sold here. Provided for the children here, but this school is trapped in the same system. So as a result, farmers like me who produce cheese or the local beef producers are not necessarily being able to provide this school, which is a serious mouth and a market, with the products, because the infrastructure's not there, the distribution systems aren't there, the whole thing it's not there. And so we're trapped in a system that the farmers don't like. The people around here and all over the country and beyond are getting food of a poor quality, which is anonymous, and it becomes a completely perpetuating system. And there was a woman, I've forgotten her name, somebody in the room will know her name, Baroness Labour Pearess, who just came out with a food plan for Wales, and she visited my farm a few months ago. We had a very good conversation, and apparently that plan, thank you, is pretty enlightened. And it is, and you probably had something to do with that, Jane, it is a plan of relocalizing food systems and getting the Welsh population to eat the food that the farmers of Wales produce. But I think we're a long way at the moment from that system, and it will require policy intervention from government, as well as a massive educational campaign and also leadership to break it.
Thank you. Thank you, Patrick. Volkert, I'd be interested in your perspective on transparency. Why do you think it's so important? And what are some of the challenges? And why wouldn't Cargill be able to do the same thing? What's special about what you do that others wouldn't be able to do it?
Well, what Cargill should do, I think I postpone the answer to that question to my next life. But the question about transparency, I think, is crucially important because we're commodifying everything. And anonymity in supply chains, as both John and Patrick explained, is killing values, is killing consciousness. As a result, what you don't know, you can exploit. So we lose our commons and our ability to sustain food production if we don't bring in transparency throughout the entire supply chain. And the trouble is that we don't have a profit definition right now that helps transparency. Actually, it encourages anonymity because we only factor in short-term profits, as John explained. And the Unilever example is brilliant, because short-term activists basically said, stop your sustainable living plan policy, stop paying for healthy soils to produce long-term and sustainable palm oil, and you can bring down your cost immediately, and we can pay you back the 140 billion that we pay right now. We will earn that back throughout the next few years if you stop with the sustainability nonsense. So we seem to have the wrong profit definition. And I think there's nothing wrong with profit, but we need to redefine it. And not in a sense of people, planet, and profit, because that usually means, that sounds like triple bottom line thing, nice, but actually it means people and profit lose out, planet lose out. So we need to move to people, planet, and purpose or something, or meaningfulness. And the summary of that should be the new profitability. As long as we define profit at the expense of people and planet or future generations, we will not be able to sustain our food system. So the key to this is transparency, whether it's within commercial supply chains or within policies that create a more level playing field where the polluter pays and those who deliver the commons are subsidized, or whether it's on a scientific level and a research level. That doesn't matter. It's necessary on all three levels, I would say. And and there's no one silver bullet to solve this. So we need actions and initiatives on all three levels with regards to this type of transparency.
Transparency real quick, since you wanted a conversation. So I fully agree with everything Volkert just said on transparency, and I again draw the analogy to living systems. At a human cellular level, we get sick when our cells can't communicate accurately between each other. You get cancer and you die. So the purpose of transparency is accurate communication. But I would say, in addition to that, we still need the system to operate according to the patterns and principles of living systems. So transparency, when the system is organized and designed in a way that violates the patterns and principles of living systems, won't solve the problem. And there's no better example of that than in financial markets, where we've had a 20-plus year effort now and invested tens of millions of dollars in increasing transparency around what we call ESG, environmental, social, and governance factors. And lots of companies have invested lots of money to be more transparent. And in our current capital markets paradigm, people don't care. They still buy and sell shares based on quarterly earnings, as opposed to this more holistic approach to understanding value creation. And a Unilever of the world is still subject to a hostile takeover, even though it's doing the right thing as best it can and being fairly transparent about it. So transparency is key, but it won't offset the system design if it's in conflict with how living systems work, in my opinion.
All right, one very last question, John. So with the Unilever example, are you really coming to the conclusion, therefore, that the transition within the current capitalist system, within the boundaries of the current capitalist system, cannot really happen because of the imperative of the financial markets to get returns immediately? And therefore, the kind of vision and financial system that is needed to think longer term is really incompatible with the way the system works.
Can I add a question? To blend in, for the dialogue. Sorry, Guillermo. This is a hostile takeover of the panel. In conjunction with Guillermo's question, I would like to ask as well, how can we overcome the perverse incentives that lead us to the situation where we are now? Because we all know it's nobody, no farmer, no consumer gets up in the morning and says, let's pollute some soils and kill some biodiversity. And yet it's happening because of wrong pricing, because of a wrong cost definition, and based on that wrong profit definition, we have the wrong fiscal incentives and all of this. So as the leading JP Morgan, Wall Street specialist, how are you going to solve this? It's a good question, isn't it?
You have 30 seconds.
Yeah, right. So on the first question, the irony in the Unilever situation is that large investors could earn a very happy so what are they trying to do? They're trying to pay their pensioners their liabilities that they owe them. And they'd be delighted if they earned 7, 8, 9% return if it was a resilient, stable cash flow. And they would all raise their hand and say, I would do that tomorrow. Because Unilever is a slow, stable, mature business, it's valued in the capital markets at a low multiple of its earnings, which means, and this is, I'm going to try not to get technical, but it means that if you buy Unilever and have them pay out their cash flow, you earn a very high annual return, right? So in other words, if you buy Facebook, it's valued at 100 times cash flow or sales or some crazy number. If you buy Unilever, it's valued in the marketplace, in the existing capital marketplace, at 7 times cash flow. And if you do the reciprocal of 7, you get a very high double-digit yield, which you actually, as an investor, could have earned or received as a dividend, a big chunk of it, to pay out your pensioners, and then allowed Unilever to reinvest the rest in their business transformation. So the capital markets are actually not well suited to own mature, stable businesses. So there's an opportunity to shift those businesses that are, the classic cash cow, speaking of agriculture, into, that was a joke, into a more evergreen, stable ownership pattern. And the opportunity here is that most of the damage done by big companies is being done by big mature companies that trade at low multiples of cash flow. So I don't have a simple answer to can it happen within the current capital market paradigm, but I think one thing's for sure is there's way too much money that's moved into speculative activity, and there's a difference between speculation and investment. So we need to remember what investment is, and we need to get big investors like pension funds to invest again as opposed to speculate with their assets. There's a lot of more things that would need to happen, but I do think it's possible to, it's an evolutionary process. It's not a stop it and start over again kind of situation. I didn't answer it.
I just want to add one point, which is made by a man called Duncan Pollard, who's the sustainability advisor to Nestle, who showed this incredible chart when I was in a conference. Guillermo was there as well in Milan a couple of years ago. And I think it was done by KPMG maybe. It looked at the profits of all the big listed multinational companies in different sectors. And then it took, there was a bar chart. So it had like all the things, you know, mining and fossil fuels and everything. And then it deducted from the profits the externalities. And there were about a dozen different sectors represented, one of which was food and farming. And I think this was even commissioned by Unilever, maybe. And there was only one sector where if the externalities were deducted from the profits, the company would go into the red. It was food. So in other words, no wonder Unilever can't take the actions that they need to take to be responsible for their externalities, because if they did, they would go out of business. So to your question, Guillermo, surely unless we get this, you know, honesty of accounting, Robert, who can produce milk for 27 pence a litre, whatever, let's say my milk's costing, I don't know, 60 pence a litre to produce. That's partly because I'm inefficient and small, but it's not just that. So we have to somehow find a way of monetizing these externalities.
Great, thank you. Now let's open it up to wow, lots of hands. Let's start here.
My comment is that it is possible, because the system is inherently more efficient than we just saw in that film, for leading entrepreneurial farmers and businesses to do that and be profitable and even invest in their workers' houses and everything else. But in my opinion, it's a bit like Ballymaloe. I don't know if Dorina is here, but she's been here today. But I mean, Ballymaloe is an incredible example of that, where they've created a prosperous local economy in Cork in Ireland by doing exactly what was happening in that film, adding value to food and all the rest of it. But I would say that the number of farm businesses that can do that and sell onto discerning markets will be a self-limit. It's a bit like the organic market. So many people will do it, and then it won't be able to break through the glass ceiling, because there's still this economic headwind, which is represented by the failure to account for these negative or incorporate these positive externalities. So I don't think it's not that we can do nothing, or that I could improve my economic viability at Burghuernen, but we also need the changes that we've been discussing.
Yes, agree. Thank you for the question.
You're another example of a business that's thriving.
Yeah. So I thank you for the question. I think we have this tendency to always look at stars that are a little bit too far away from us, and we need them, because we can't just navigate on the lights of the passing ships. So we need the lights of these stars, but at the same time, we can do a lot more than we think, and the solution is usually right under our nose. And I think we've been talking about tipping points a lot, haven't we? When is it going to happen? Well, I'm not saying it is now happening, but things are changing. Since the birth of the Natural Capital Coalition and the protocol, and the Social Capital Protocol, which was an initiative by the World Business Council, headed by Paul Polman, things are changing. Financial auditors see a new business opportunity in making natural capital assessments, not for moral or ethical reasons, they just smell a business, but the merger and acquisition market, and I was wondering what John thinks about this, is also increasingly talking about stranded assets. You know, if we agree with Paris, with or without the Donald, on 1.5 to 2 degrees max, that is an equivalent of, 500 gigatons, I'm told. But we have for 250,000 gigatons of CO2 fossil fuel equivalents in our soils. So a lot of that is stranded or potentially stranded, and people are sort of gradually seeing that as a risk for future profitability of their company in the old system. So purely from a risk point of view, we know if you are in the long-term business, finance business, we know that things will change disruptively in the next few years, decades. So how do you factor in that risk in an old economy? And just because of that risk mitigation drive, things are changing. And I think once that tipping point is happening, things can go very fast, and the old dinosaurs better hurry up. We all know that health is more than absence of disease. We all know that health is...
Was it a customer marketing impact?
Yeah, consumers.
Okay.
Yeah, so the farm, the toxic risk or pollution risk at farm level wasn't even taken into account. It was purely measured on the basis of MRLs, maximum residue limits, that are set by the EFSA, and the same EFSA monitors the occasions where this MRL is exceeded, is not met. And they record that. They have statistics about that. And they know the toxic effect, and the WHO has converted that into and monetized it. So it's low-hanging fruit. We thought we should use it.
So on the land question, I actually learned about holism through investing with a gentleman named Alan Savory, who's been around these conferences more than once, and I'm sure that I know people in the audience probably are familiar with his work. And to get that, so we created a business together that manages land holistically, and to get it started with a financial partner and I, we invested in land, and now that's actually a nice stable cash flow generator. Less stable than I'd like in drought years, but relatively stable. There are pension funds. I know the Dutch, I believe the Dutch pension fund is investing in land in Australia that is holistically managed. Yeah. So the answer is certainly yes. Yeah. Is that land grab? Good question. In my opinion, no, given that I know what they're trying to do, but that's a slippery slope probably.
I was always very critical about these pension funds investing into tobacco industry to make sure the pensions of the doctors would be safe. But now, since they've taken an interest in true cost accounting and they want this dashboard to measure the impact on people and planet of their funds, all of a sudden I like them enormously. And what they're doing in Australia, I know they're investing there. I have no idea whether that's land grab or sort of something else. But back to your question, Andy, right? Yeah. What could Wales do? France published this study that they concluded, I don't know if you know this, Patrick, they concluded that if you monetize the impact on water pollution caused by agriculture, you would need to pay farmers twice the money they get for their food right now, for their production right now, to compensate for the costs in order to avoid these costs, twice. So food should be twice as expensive just to avoid water pollution. And then we are not talking about biodiversity or soil or climate change yet. So on a smaller scale, I think it would be a great idea for Wales to do a true cost study on food and farming in Wales for the entire region. And then hire a good marketing company, PR company, and sort of blow the shit out of the opposition.
I think we need the Dutch to advise us here. Yeah. I think that's a great idea, and I think your question is so important because tipping points have been mentioned, and who was it who said earlier, it looked impossible. And when I went to this conference the other day, Nestle conference it was that we were at, somebody put up Kodak and said, look, how quickly things can change. And I feel that we could be much closer than we think to a tipping point in Wales. Just takes one big intervention which really blows things out of the water, and then you could start to get incremental change. And also health has been mentioned. I mean, if the real cost to the public health of Wales was, understood and illuminated, it would be clear we have to change our food systems.
I just wanted to share another project I'm involved in on this food nutrient issue. We grow microgreens, sunflower microgreens primarily. We add a lot of amendments to the soil. So there's organic, which is simply not poisonous, but then there's nutrient-dense food, and you can measure this very easily. And it's astounding what you can do with a microgreen, which tastes great. And what made me think of it is when the chef or someone talked about how they've reduced the amount of strawberries in the dessert and replaced it with jelly. And I mean, we can't be doing that. We actually need to be adding nutrient-dense food to our kids' diets. And that, speaking of transparency, needs to be on the food labels. But it's possible. And this is done at a very economic, we're selling 9,000 salads a week in Whole Foods in the DC area, and very competitively with other products. So it's an example of an adaptive, innovative approach to competing in the current environment.
Just to comment on what Dorina said, surely the true cost accounting study for Wales, or anywhere for that matter, that Volkert was recommending could include nutrient density of foods, because you just monetize that and you say the cost to health. It's another, if all the salads that are on sale now in the UK supermarkets are grown in rock wool, none of them are grown in soil anymore. Well, let's monetize that, the cost to public health. And look at what we ate for lunch and how delicious it was. Why? Because it was properly grown.
You've just opened up a huge amount of stuff, which is all important stuff. I'm not sure I have a quick, pithy response. I would say one thing, the demarrage conversation is, so money is distinct from investment. And today, money doesn't sit around and earn much money, right? Because interest rates are zero. So all the people that are all focused on the money system and the fact that it's got interest embedded in it, that argument kind of goes away when interest rates are zero. So it's more complex than that. And but I don't want to. We could talk we maybe follow up after. So, but I agree with Ken in general.
But could you comment on this stamping of the money, because that's a common practice in local currencies, that you can't sit on the local money; it just loses its value unless it's stamped. And that stamp costs money, so it actually costs money to keep money. Would that we talked in the bus about this. I thought you had interesting ideas.
We did? Yeah. What did I say?
Well, you're promoting local currencies.
Oh, yeah, I'm a fan.
Yeah, I see.
But so local currencies, again, are aligned with the principles of, so monoculture is what we have today in terms of our money system. For the European community to move to the euro was in violation of the living system principles, which is that diversity is more resilient than monoculture. So all of these alternative currencies that are popping up in response to the pressure of economic stress, which again is what happens in real systems, they respond to the pressure, is what you would expect. And the idea of a stamp keeps the money circulating, which is a good idea. But if that money gets invested in a real enterprise, it's no longer money; it's now ownership in a real enterprise. So the stamp issue would go away.
I'll just say something tiny about the land capital problem. I don't know what the solution is, but if it was impossible to own land without using it, then it would suddenly, directly use it rather than have it as an investment. And that was a sort of, what's the word when you get around something, proof system, then that would dramatically impact on the value of land, which would be very helpful.
Now, just thank you. I think it's an enormous business opportunity for a new fund to do exactly that, because change will never come from a following majority, always from a trend-setting minority that is an awareness elite, that even if financial auditors haven't established right balance sheets yet because they don't have the metrics to monetize everything, there is always a new target group, commercially spoken, that is ahead of this, that would put their money in long-term funds that would even be profitable if the true cost principle would be applied. So I think I smell a tremendous opportunity for John here on my left.
Well, I've been negligent in talking about the entire impact investment. I'd almost call it an industry now. So this is a big thing happening around the world, which is investors looking to align their investment capital with social and/or environmental purpose. We've even got the Ford Foundation, 25 years later, that sort of decided to allocate 10% of their endowment into impact investment. And slow money is a piece of a much bigger movement, and it's a beautiful, Woody's a friend, it's a beautiful thing at a very micro scale. And so that's the good news, is that this is now an industry. The bad news is that the industry is being co-opted by Wall Street. And so now big, TGB, all these big private equity funds are now offering impact investment funds. And the reason they're doing it is because they see particularly young and particularly women increasingly interested in moving their money into alignment with their values. And there's a massive wealth transfer. The numbers are staggering. They're like $40 trillion in the next generation. It's going to move from one generation to another. And so all the wealth management firms are worried about it. And but I'm sorry to be the wet blanket on these things, but if we think of impact investing as just the next asset class and continue to treat it like we treat everything else, every other investment, and put it in our modern portfolio framework and not have the harder questions, then it's, it'll have some impact, but it's not going to actually change the way the world works. And right now, the big discussion in the impact investment space is, are you a financial first impact investor, or are you an impact first financial investor? Which is just evidence that we're still trapped in the reductionist way of thinking. So, but it's progress, and Woody's doing great work for sure. And your name is almost Jane Jacobs, who is one of my absolute heroes. And the end of my slide deck, so now I get to say my last slide, which says, it's not how big you grow, it's how you grow big. I ask myself that question all the time. My little business plan when I started Capital Institute was, oh, wow, I've figured out all this stuff. It's actually pretty basic common sense. And I've got a credibility. I can go tell all those big guys what I've learned, and they're smart, and then they've got the power to shift this thing. We're done. And it turns out that the more successful you are in the current system, the harder it is for you to see, to awaken to this. I don't know how else to say it. And so I've actually shifted my focus to the next generation, who just get it. They just intuitively get it. And you don't have arguments about, no, but this, and what about that? It's just, duh, now how do we do, show me what to do. So, having said that, I'm still always on the lookout for someone who's sort of vulnerable to an epiphany. But this gets to the whole consciousness shift, and why, as you beautifully said, thank you for saying that, ultimately we're not going to logic our way out of this. And probably everyone that's in this room has had either born with or had some kind of a consciousness shift that's caused us to be doing this work. And so, you know, there's people, there's a woman that takes business leaders on 4-day quests. And rather than take them to a beautiful place or the woods, which is sort of the typical model,
in a way, it relates to Volkert's storytelling, because if we are shocked into an awareness of what we're losing through a compelling story, sometimes that can be, maybe that's the moment of epiphany. And it just made me think of what Rudolf Steiner said about the role of organic life on Earth as being a kind of interceptor between the cosmos and the mineral matter of the Earth. And also what Howard said, Sir Albert Howard, who said if a nation industrializes its agriculture, it will end up with a population of impaired physical and mental health. He could have said spiritual health as well. And really what we are doing is we are degrading the capital, which is the lifeblood of civilized society. And so somehow we need to, all this conversation revolves around the intervention that's needed to start to make it possible for normal life, as opposed to harmony, philosophy, to start to reverse that.
Okay, so I'd like to hear from each of you what are the main messages that you think you would take into the world from this discussion.
Thank you for the question about flooding. I'm from Holland, and I'm very concerned about this, I can tell you. My office is at 6-7 meters below sea level, so the whole idea behind true cost accounting is how can I save my office?
what floor are you on? What floor are you on?
Yeah. And then but that's even too low. Anyway, on the soil issue, in addition to what Patrick said, the ozone layer, that was relatively simple. A few CFKs and Bob's your uncle. Whereas, you know, it's not polite to say that maybe, but the soil is so much more complicated. And I would like to quote an English entrepreneur called Daniel Dunlop, who lived at the beginning of the last century, who said, we will only create order in the chaos of our global economy if we start understanding the Earth as a living organism again. And that's where the difference comes in. So I think if Guillermo invites us to a few last lines, then I would say this ability to understand Earth as a living organism and to understand the holistic nature of how things are interconnected, interdependent, the harmony of things. It requires a mind shift, so we need to invest in spiritual capital equally as much, because otherwise we won't be able to understand how to invest in social capital and ultimately in natural capital and we need to invest. And I thought Richard Dunn is his name, I think, what he said about education this morning, that really moved me. Because the way he talked about education, I thought, wow, if all teachers would do that, and we would teach these skills at business schools, at university, not just, you know, delivering the Excel sheets, and the return on investment nonsense, but if we would train social skills, mental skills, spiritual skills, then this place would be another place. So, in line with what you said about, I think, the change, if we want to address the tipping points that we're facing, these are the skills we will need. These are the new capitals, the new returns on investment we need. Because we're talking about return on investment in natural capital, social capital, and spiritual capital.
Quick comment, closing comment. So, the storytelling that you raised, Patrick, I really resonate with that because, a lot of us have spent a lot of time analyzing and analytically dissecting this thing. And one of my teachers is Dana Meadows, who I'm sure people are familiar with. She wrote a famous paper called Leverage Points, Places to Intervene in a System. So she was asked the question, how do you change a system? And she goes through, 10 items, and it's sort of a trick because the stuff we normally think of is at the bottom of the list, and the things that are less obvious are at the top of the list. And the one at the very top was the need to change the paradigm, because the paradigm that we live in determines how we think about all the pieces and policies and whatnot. And so, and how do you change a paradigm? Well, it's probably through myth and story and the way we've always changed paradigms. And so there's actually a lot of effort going on in the States that I know of, and probably in Europe as well, around the challenge of storytelling. And it's really the story of the shift from the modern age to the integral age. And that's a transition that's as big as the Enlightenment, and we're living through it, and we don't even realize it. So that's the story we need to tell. I don't know how to tell that story in a way that will gain traction, but anyone who has ideas, I'm all ears.
I think that's right. I think we are in the paradigm shift. We just got to wake up to it. It's so exciting. And I love the idea that although this is a mechanism, that, the point that Andy's made, and we've got Jane here, we've got some people here who can start to capitalize on the paradigm shift which is already trying to happen. And if we could have something along the lines that what Volkert suggested, with a really major externality study which would capture some of the things, including what Dorina said, and really start to show the madness of the economic system we've got, which is make it impossible for the circular economy to operate, then I think we would start to accelerate even, it would become visible, this transition that's happening already and trying to happen so much now.
Thank you for those really interesting and inspiring last messages. We are coming to a close now, so I hope that you all enjoyed this conversation, and I hope that you also agree with me that we really owe a big thanks to our panel for the interesting presentation of the points and the discussion that they had with you. So thank you very much.